let's just get right into it today. Adam, would you think that there's a lot of differences between a for-profit financial statement versus nonprofits?
Yeah, definitely. I mean, there's, of course, some similarities. My kids love to use them both for arts and crafts. But besides that, I mean, when you look at the statements, not-for-profits are focusing on different things on their financial statements, which kind of, changes the way you look at things, the way things are presented on there. So, not-for-profits don't have ownership. They're governed by a board. They're, run by the community. So there's different ways of showing that. So there's things of that nature that really kind of change the way that statements kind of show those things. So what do you think? We just go right through the statements?
Yeah, we'll start at the top.
All right. So first one, statement of financial position, also known as the balance sheet in the for-profit world. For the most part, it's, pretty much the same. You have your assets, the liabilities, and then we get down to the bottom. For-profits typically have, equity, owners, equity, members' equity, whatever you want to call it. It's all the same thing. For-profits are owned by someone or someones. Not-for-profits are not. They are governed by a board. The donors kind of help run the nonprofit. It's a community organization. So that's kind of the way it's reflected. You have net assets on the bottom. It splits those out between what's restricted by donors, which is also a big difference in for-profit versus not-for-profit. And we will have a layered video on that as well. So why don't we go now to the income statement side of things?
Yeah, absolutely. So the income statement is where you're going to see your revenue and expenses. It's called the statement of activities for a not-for-profit organization. And it is going to look a little different than for-profits because there's going to be more columns there. You're going to see columns for with and without donor restriction, depending where the money comes from and if it's coming from a donor that has restricted it for a specific purpose or time. Then you see your expense section, and that really has the breakout between program, G&A, and fundraising, or G&A is also known as supporting services. So that breakout right there is definitely specific for nonprofits. It's one of the most highly asked questions that we get from boards as to how does my functional expense allocation look compared to other organizations.
And we won't spoil that right now. The answer to that, we'll have a later video, so stay tuned. Also wanted to mention one other thing. So back in the day when you're in college, school, taking accounting 101, one of the first topics we learn about is the matching principle. Revenues match expenses. They are occurring the same exact period. The matching principle kind of drives the entire accounting world.
Yep, I remember that.
Now you can forget it. So not-for-profits don't really have that. So the contributions are recognized when they're to be recognized based on their own set rules, and the expenses are recognized when they're incurred. There's nothing that kind of interplays with one another there. So matching principle, you remember it? Great. Forget
it now. Well, good to know. Absolutely. Then as you move through the financial statements, you have the full functional expense schedule. And that's where you really see the detail and that breakout between programs, supporting services, and fundraising. And then we move into the cash flow statement. Are there some differences there too?
I mean, for the most part, the cash flow statement is pretty much the same, whether it's a for-profit, not-for-profit. Whether it's a for-profit, not-for-profit, typically people don't understand it. But it's still, an important statement. It's really telling the reader how much cash flow is being generated from the operations, how much cash flow is being used for, for financing, whether it's for debt, how much money is being used for capital expenditures. So it's still, it provides a lot of important information.
But not everyone reads it.
Not everyone reads it, unfortunately. It is a very complicated statement to read a lot of times. There is two ways of presenting it. So for-profits are always showing it as the indirect method. And then not-for-profits, a lot of times, most of the time I would say, show the indirect method, but sometimes they show a little differently, and that's called a direct method. But for the most part, it's shown the same exact way, same statement name, really no changes there.
And then we get into the footnotes of the financial statements. So you'll get to read a little bit about the nature of the organization, what that nonprofit does. That's where they really get to tell the reader about their mission and who they help in the community. A lot of the footnotes are similar and the same to a for-profit company.
Also, funny enough, the footnotes and cash flows are very similar in the fact that nobody reads them.
Nobody reads them, but they have a lot of useful
They
information
do.
in there. And so then you get into some extra schedules and extra audit reports if you end up needing a yellow book or a uniform guidance audit. So we're going to go into that in some of our future video series about the differences between a regular audit, a yellow book audit, and a uniform guidance audit as
And you
well.
have no idea what that means, don't worry about it. We'll go over that.
We'll tell you. And as well as we're going to cover that functional expense topic. Join us next time.